on to our next esteemed colleague, which is going to join us online for the discussion, our good sir Adesoji Solanke. So Adesoji leads fintech and banking investment banking organizations across Africa for ABSA Group, bringing over 17 years experience in investment banking, equity research and venture capital. Based in London, he has advised on landmark deals, including Africa's largest fintech IPO, and is a trusted advisor to CEOs, boards, investors navigating the evolving financial services landscape. A Mo Ibrahim scholar with an MBA from London Business School and economics degree, Soji is also a 3 times Financial Mail analyst, topped in Africa, and an awardee of such prestige. Round of applause for Mr. Adesoji, who's joining us online.
Many thanks to Abe, Martha, and the IT News Africa team for inviting me to this conference today. I'm joining you from London, and hearty greetings to many of our friends, partners, and colleagues in the audience. I'm Adesoji Solanke, and I'm with ABSA Group. I head our FinTech and Banks Investment Banking Origination team. I'll be speaking to you today about bank FinTech partnerships as a solution to banking disintermediation in Africa. Okay, so let's go to the first slide. Now, let's begin with a striking fact. In recent years, nearly 6 out of every 10 new financial accounts in sub-Saharan Africa have been opened not through banks, but through mobile money and fintech platforms. This isn't just a trend, it's a transformation. And the question it provokes is powerful. Where are these new customers coming from, and why are they choosing fintechs over banks? Okay, we'll go to the next slide. You see, just 20 years ago, there was no iPhone because Nokia still reigned supreme. Netflix was still mailing DVDs, and M-Pesa did not exist. Fast forward to today, and you see that technological advancements and changing consumer behavior have not only redefined how we live, but also what it means to be a bank. And although African banks are now investing 3 to 4 times more on technology than they were 2 decades ago, the pace of change has been even faster outside the banking halls. The result is that we now live in an Africa where banks are no longer the default gateway to access financial services. So the question is, what do we do next? And my answer to that is strategic partnerships, not as a fallback, but as a forward-looking competitive advantage. Next slide. Let's be clear about what disintermediation means. It's by no means the end of banks, but it is the shift of the customer relationship and, by extension, economic power to new players. I hope we're on the next slide on disintermediation. Yep, okay. Today, fintechs own the interface and drive innovation. They own the trust of the younger consumer, and in many cases, they own the data. Banks, on the other hand, provide and manage the rails, the float, the compliance, the licenses, and have strong credit underwriting capabilities. But banks also have tons and tons of data. This separation has consequences because banks are being pushed into the background while fintechs take the spotlight. Also, revenue pools or the growth of those revenue pools are also under threat. As a rule of thumb in banking, non-interest income traditionally represents 30% of a bank's P&L, okay, or 30% of revenues. And this is where fintechs have attacked first, with some modest success. But they are also moving upstream towards the remaining 70% net interest income as well. Now, here's the twist. Fintechs actually need banks just as much as banks need fintechs. For example, without banks, mobile money operators would have had to build expensive, regulated deposit infrastructure to manage all that cash. That's not just costly and timely, it's capital inefficient. And without fintechs, banks may never have reached the tens of millions of new customers they now have, many of whom live outside urban areas. Look at Kenya, where M-Pesa aggregated millions of retail and SME users. But M-Pesa's success there also laid the groundwork for APSA's Timiza app, which is a digital platform enabling banking access for both APSA and non-APSA customers. That's not competition, that's ecosystem expansion, a win-win for all parties. Next slide, please. My belief is that the future will reward those who embrace deeper, more deliberate partnerships across 5 pillars. Firstly, product development, which includes co-creating digital credit, insurance, payments, and other products. For example, APSA partners with Woolworths to offer a wide range of financial services. Secondly, data sharing and analytics, which includes leveraging APIs and open banking to personalize services. For example, in South Africa, APSA partnered with Stitch and Ozil to launch APSA Pay for account-to-account merchant payments. Thirdly, shared capabilities, which includes risk tools, KYC frameworks, and fraud engines. For example, APSA partnered with Symphony AI for KYC and fraud detection systems. Fourthly, regulatory alignment, which includes joint engagement with policymakers, especially on licensing, sandboxes, and consumer protection. And finally, distribution collaboration, where banks partner with fintechs to distribute financial services. For example, APSA partners with MTN Momo and Jumo in some African countries to accelerate access to digital credit. Next slide. Having said all of this, sometimes collaboration needs to go even further. We may see and arguably need more acquisitions between fintechs and banks. Why? Because the economics can be powerful. For example, a large consumer or SME lending fintech with expensive wholesale funding can be acquired by a deposit-rich bank. That bank replaces costly funding with cheap deposits and rolls out the fintech's engine across the bank's larger consumer base. The result? Instant profitability and scale benefiting both parties. In a similar vein, a fintech can acquire a bank or microfinance bank with cheap deposits, which would allow the fintech to improve profitability and expand its range of financial products. And I have to say that these are not hypothetical ideas, as we are already seeing the seeds of this future across many of our markets in Africa. And yes, as an investment banker, I am biased, so let's talk more if anyone is interested in exploring these themes even further. To close, the final slide. To conclude, here is the vision I want to leave you with. Over the next 20 years, the next billion African customers won't walk into a branch. They'll tap a screen. To serve them, banks must become more tech-like and fintechs must become more bank-like. That future will not be built in silos. It will be built together. And the most successful players won't just be the most digital, they'll be the most collaborative. Thank you for having me, and all the best with the rest of the conference.